Sasol Group delivered an excellent business performance, supported by a weaker rand-dollar exchange rate as well as a progressive recovery in chemical prices. Headline earnings per share was up by 14% to a new record of 16 rand 60 per share. Operating profit was up 7% despite large remeasurement items of 7.6 billion rand relating to our Canadian shale gas asset, as well as a 1.4 billion rand impairment and loss on disposal of our Solvents Germany assets. The group's continued focus on cost management, as well as the early savings from our business performance enhancement program, has resulted in us containing normalized cash fixed costs to 1.8% below the South African producer price inflation of 7.3% for the 2014 financial year. Taking into account our record earnings, the ongoing strength of our financial position, our capital investment plans, as well as our progressive dividend policy, we have increased our interim dividend by 1.5% to 13 rand 50 per share, taking the full year dividend to a new record of 20 rand 50 per share. Our dividend yield of approximately 3.4% and our total shareholder return over 5 years of 184% continues to position Sasol quite competitively within its peer group. We continue to deliver strong cash flow generation, as evidenced by the increase in our cash flow generated from operations of 26% to 65.5 billion rand. This, together with our ungeared balance sheet that currently reflects a deleverage position of 6.3%, continues to position us quite well to execute our attractive growth program as well as our progressive dividend policy. Our capital expenditure of 40 billion rand of 2014 was largely spent in South Africa, of which 57% was spent in South Africa. Our capital estimates for 2015 and 2016 is 50 billion rand and 65 billion rand respectively. The majority of the capital expenditure over the next 2 years will be spent towards our growth projects as we execute our gas-based strategy. We expect the macroeconomic conditions still to remain volatile and uncertain, which may impact our assumptions in terms of oil price and rand-dollar exchange rate, and we do expect some further financial market volatility. We, however, do expect a very strong 2015 operational results. Synfuels volumes are expected to be between 7.5 and 7.6 million tonnes, and our Oryx GTL utilization rate is expected to be about 85%, taking the statutory shutdown into account. Our gas-based volumes from our Canadian investments are expected to be at similar levels compared to the 2014 financial year. And we also expect to see increased volumes from our natural gas, ethylene and propylene value chains. We also expect normalized cash fixed costs to follow inflation. However, we do caution that cost pressures may be experienced as a result of higher energy costs for the 2015 financial year.